Today is April 10, 9:55 a.m. and we saw options on Mullen Automotive and wanted to just let everybody know about them. These options, they're higher volume, but if you calculate the total amount, it's not so much just because this stock is at 10 cents a share. So this is very cheap. It is very at the kind of low end. You can see here it hit a low of 0.08. So it looks like it tried to bounce on this date on March 29, and since then it has come down again, and we are going to take a position. Actually, we think it is bottoming, and the reason why the bounce is actually they started to deliver their EV cargo vans to the University of North Carolina recently, and so it's quite positive that they actually have a product, and so it's not as speculative anymore. When some of these companies, speculative stocks, don't have a product, but since this has a product and it is being and it's out there now in the public, and the stock is so cheap at 10 cents per share, which means the options are also very cheap. But keep in mind, like, the stock has been dropping, and it is below $1. So you can see it's been going down and down, and to a point where it's so close to zero, right? And also the fact that they actually are extending. There's a rule on the for the stock exchange where it has to meet a minimum of $1 bid price. You could see here on March 8, NASDAQ approves 180-day extension for Mullen Automotive to meet the $1 bid price. You can see here. So they got another 6-month extension to meet that $1 price. So our thinking is, so they have another 6 months to make sure this price, this 10 cents, is above $1. So they're going to do whatever they can to make sure to get that price up. And so when we saw these some options being bought today, you could see here, this one's in July. These 0.5 calls, lots of quantity of them. They're just for $3 each, 3 cents, which is $3. And you could see here on the options chain here that there is 3,000 volume. But keep in mind, if they're paying 3 cents, $3, essentially that's about $10,000, right? So somebody put in $10,000 on this stock today, and so if it was going bankrupt, then why did somebody just throw away $10,000? This expires in 100 days. To be safe, since $10,000 is not very much, and some people are willing to throw that away, we just bought something that is 648 days away. We like this one because it's only going for right now $8. And since you're getting essentially 6 times the amount of time compared to this 100, and you're not actually paying 6 times the amount, because here on the Julys, you're paying, if you got this one, it'd be 3, but 3 times, 6 times 3 is 18. And so you're actually getting a pretty good deal at 8 by getting 6 times the amount of time for this price to be above 0.5. So we like that. And also there is quite a lot of open interest. You'll see here 123,000 contracts are open at this. Okay, so And so this is just a leap option where you buy it and you don't think about it anymore and you don't trade this because it's such a low quantity amount. But if it does recover and the stock goes back up above 1, it will be very profitable. So we like that. So let's see if there's anything we could see here. Let's take a look at it. Just analyze this $8 one. So you can take a look at it. Let's say it does go above $1, which is what they will be pressured to achieve. You'll see here once it reaches $1 at expiration, that's $81, right? So right here, that's $81 minimum because time. That's the blue line is the year 2025 January. If it gets there earlier, you actually make more. The purple line will show you that you actually get more because you'll experience less time decay because this $8 has a very slight negative theta, so every day it does drop a little bit in value, but very little, 0.01, very little compared to the delta you're getting out of it. So we like that. And so $8 turning that into, once it hits to 82, that's a multiple factor of 10. So that's like multiplying your initial investment by 10. So if you can 10x your initial investment, that's pretty good. And there will be, we think there'll be a lot of factors trying to get that price up to 1 in these 600 days. So we like this, and this is one way you could kind of take advantage of this low price and leverage it with options. It is 5% up today. So it does move in very different amounts. It doesn't really follow. It's not very correlated with the current market. So let's say the market is down today, which it is right now. It doesn't necessarily follow the market as well. So because the stock is so low. Something that that we wanted to kind of share with everybody, that what we are doing. And so at some point, very distant future, to hopefully it is up. Definitely, hopefully it is up by 1, right? So the last time it was there, you'll see here at around July of 2022. So it's almost 3 more months, and then it's been a year since it has. And so for it to be under $1 for a year, I think the NASDAQ will continue to pressure them to get that price up above 1, because that is one of the rules to be on the New York Stock Exchanges. Otherwise, you have to go to over the counter. If you're just, they probably don't want to become a penny stock, because this is a company that is selling EV vans. Okay, well, if you found value in this video, please give us a like on this channel, and it will help us continue to make more videos to provide the content if you find it useful. And so take care, everybody, and good luck.